Good day everyone! In today's vlog, we are going to tackle about the fundamentals of taxation. But before that, allow me to introduce my group mates. By the way, we are the group 12 composed of Mr. Adrian Satura, Mr. Mardy Sumbilon, and yours truly. So, to start with, we have here the objectives. By the end of this lesson, you will be able to define taxation, discuss the nature of taxation and the purpose of taxation, state the canons of taxation and the basis of taxation, explain the concept of taxation, discuss the objects of taxation and situs of taxation, and state the limitations of taxation and the concepts related to taxation in terms of avoidance or non-payment. First of all, what is taxation? To define taxation, it is the process by which the sovereign, through its law-making body, raises revenues used to defray expenses of government. It is a way of the government in increasing its revenue under the authority of the law, purposely used to promote welfare and protection of its citizenry. It is also the collection of a share of individual and organizational income by a government under the authority of the law. Next is the nature of taxation. Taxation is a state power exercised through the country's legislative body. The principle of taxation states that taxes are collected to support the government in its expenses and services for public welfare. Reciprocal duties of protection and support between the state and its citizens. The Constitution also states that revenues through taxation must only be used for government operations and for public welfare. So, taxation is the inherent power of the state to impose and demand contribution upon persons, properties, or rights for the purposes of generating revenues for public purposes. This power is legislative in nature and is essential to the existence of any independent government. Now let's move on to the purpose of taxation. The purpose of taxation is to raise revenues from all possible sources to support government expenditures and services and to promote the general well-being and protection of its citizens. Taxes safeguard newly opened industries to new industries and other enterprises. Taxes also shield domestic producers by levying a much higher custom duties on imported goods. Basically, the primary purpose of taxation is to generate funds or revenues that can be used to defray expenses incurred by the government in promoting the general welfare of its citizenry. Taxes are the major source of government income. Taxes are the lifeblood of a nation. Other purposes of taxation includes to equitably contribute to the wealth of nation, to protect new industries, and to protect local producers. Next is the canons of taxation. Canons of taxation refers to the basic principles of a sound tax system which identify the following. First, fiscal adequacy. Second, administrative feasibility. Third, theoretical justice. The first canon of taxation is fiscal adequacy. Taxes collected by the Bureau of International Revenue, or BIR, must be sufficient enough to fund the necessary government expenditures and basic services in a given fiscal year. Revenues must be capable of adjusting to variations in public expenditures. So fiscal adequacy means that the sources of revenue must be sufficient to meet government expenditures and other public needs. Second canon of taxation is administrative feasibility. Payment of taxes must be taxpayer-friendly. Administrative feasibility means that tax laws and regulations must be capable of being effectively enforced with the least inconvenience to the taxpayer. Third canon of taxation is theoretical justice, or the ability to pay principle. The ability to pay principle holds that taxes should relate with the people's income or ability to pay. Theoretical justice means that a sound tax system must be based on the taxpayer's ability to pay.
And now let us proceed to the basis of taxation. First, the Constitution, the fundamental law of the land. Second, statutes, laws passed by the Congress or presidential decrees. Third, Bureau of International Revenue, rules and regulations. Fourth, judicial decisions on tax cases by the Supreme Court. Fifth, provincial, city, and municipal ordinances. Sixth, observance of international agreements and administrative rulings and opinions. Situs of taxation. Situs is a Latin term for a place or location. It refers to the place where taxes are to be paid. Situs of taxation basically means place of taxation. The basic rule is that the state where the subject to be taxed as a situs may rightfully live in and collect the tax, and the situs is necessarily in a state which has jurisdiction or which exercises dominion over the subject in question. Income tax. This is paid either in the place where the income is earned or the place of residence of the taxpayer. Second, real property tax. This is paid where the property is situated. Third, personal property tax. Taxes on intangible properties are paid in the place where the property is located, similar to real property tax. Situs of taxation of intangible properties is the owner's domicile. This refers to the place of permanent residence of the owner. Fourth, business and occupation taxes. This is paid in the place where the business or occupation is located. Limitation of taxation. Inherent limitations are rooted in the nature of taxation itself. These are the limitations that are not affected by changes in the provisions of the constitutions. First, the tax revenues must only be used for public purpose. Second, there should be proper delegation of legislative power to tax. Third, government entities are exempted. Fourth, there are territorial jurisdictions. Fifth, there is an observance of international law. Constitutional limitations of taxation are those limitations provided in the Constitution. These limitations are more subject to change when a new constitution is introduced in a country. First, observance of due process of law. Article 3rd, Section 14.1 of the Constitution says that no person shall be held to answer for a criminal offense without due process of law. Second, equal protection of the law. No person shall be deprived of life, liberty, or property without due process of law, nor shall any person be denied the equal protection of the law. Third, uniformity and equity rule. The rule of taxation must be uniform and equitable and likewise progressive. Fourth, non-imprisonment for non-payment of full tax. No person shall be imprisoned for a debt or non-payment of a full tax. Fifth, no appropriation for religious purposes. No public money or property shall be appropriated, applied by, paid, or employed, directly or indirectly, for the use, benefit, or support of any sect, church, denomination, sectarian, institution, or system of religion, or of any priest, preacher, minister, or dignitary, as such, except when such priest, preacher, minister, or dignitary is assigned to the armed forces or to any personal institution or government, orphanage, or leprosarium. Double taxation refers to an instance when an income, a property, or transaction was imposed with the two or more taxes by taxing authority in the same year. Occurs when an object of taxation was levied with two or more taxes from a single tax basis. Direct duplicate. Same income taxed twice. Indirect duplicate. Taxes that are paid by the same individual or corporation based on two or more different taxing bases.
So let's proceed to the question of government taxing itself. So the government may be taxed if it derives profit in the exercise of its proprietary capacity and not when the revenues were gained from the exercise of governmental responsibility. So, the government functions in its governmental capacity when it serves the people and delivers basic services to them. So, the government acts in its proprietary capacity when it functions for profit. So, let's proceed the avoiding taxation. So, number one, shifting, the passing on of the tax burden from one person to another. So, it determined basically by one principle. The user of a tax object can avoid the tax burden to a greater, lesser, or extent the easier, the more difficult. So, number two, capitalization, reducing the price of a taxable product or service to lower the tax that will be imposed on its consumption. So, tax capitalization occurs if the burden of the tax is incorporated in the value of long-term assets. So next is tax avoidance. So, the availing by the taxpayer of legally allowable means in reducing or minimizing the tax due on certain properties, items, and services. Tax minimization. So, tax avoidance is the use of legal methods of reducing taxable income or tax owed. So, the next and lastly is tax evasion. It is used by the taxpayer of illegal means in escaping, defeating, or raising the tax due. So, tax dodging. So, tax evasion is the use of illegal methods of concealing income or information from the IRS or often tax authority. So, tax, and lastly, tax exemption. So, the best tool of immunity by the taxing authority on a taxpayer from the obligation of tax payment. So, that's all. Thank you. Hope you learned something.